All right, good morning, everybody. So, how's everybody doing on this fantastic Thursday morning? We're going to take a look at some assets. We're going to talk about the potential future. So, basically, I was expecting dollar strength. I was looking for the dollar to actually, there's other indicators that showed that the dollar is doing exactly what it should with strong energy prices and stuff like that, but I was looking at potentially for if the CPI gains in strength or shows a higher number, comes in line with expectations, then the possibility of rate hikes was going to be even furthermore in line. So essentially what I'm looking for is for dollar strength. The fact that the market did exactly the opposite of what I was looking for is not just me that was looking for that as well. It's other fundamental analysis people. Obviously, when I'm a technical analyst, so the dollar breakdown looked more probable than anything. You got a 2-week level here that you only touched once and you could not get back up there, even on this day. So once this day occurred and price just started going back away, once we took out the low of this bullish candle, because this candle was the trap, then we should have been looking for a pullback to get short, is what we should have been doing. But I let the fundamentals, or what I thought was fundamentally going to happen. I let that cloud my bias, and it also allowed me to be on the wrong side of the trade. This was a fantastic move, and there's no reason why we shouldn't have been in it. Furthermore, since yesterday, I took a trade on the Aussie USD, which was against all of my rules. And I even told everybody that it was against all of my rules, and it was extremely risky. And, that's just my way of saying you should probably just set this one out. Every rule that I have when it comes to trading, this trade went against it. And obviously it didn't work. I was trying to short this stupid thing once we got above this swing high. I was looking at this to be a rejection, this to be a fake out move, so that way we could see some dollar weakness. We didn't get that, or dollar strength. We didn't get that, right? We did not get that. So obviously I was stopped out of that trade, which is okay, right? We're going to lose trades. We're going to do that. If you want to become a trader, congratulations, but also be prepared. Learn to lose. That's the best thing you can do, is learn how to lose and lose well. That will help you in the long term. So here you can see this is a CME projected thing. It's going on the target rate probabilities for March. So that's going to be Q1. That'll be the Q1 Fed meeting. First quarter, you can see that there's a 77.9% chance that we see at least a 25 to 50% rate hike, or points, BPS points rate hike. 77%, 25 to 50. So, knowing this stuff, all this fundamental data, that's what had me on the wrong side of the trade. So, just look at technicals and only rely on them, right? Only rely on them. Screw fundamentals. If you're a fundy guy, screw you. No, I'm kidding. Other fundamental people it was a mix. Some of them were saying dollar weakness. Some of them were saying dollar strength. I was in the category of dollar strength. Now, let me show you what happened, what possibly happened, right? Because we don't know ever. I don't care how good of an analyst you are. I don't care how good of a trader you are. You still don't know what's going to happen, ever. You're taking trades at high probable entries, and whatever happens, happens. So here's the DXY on the weekly. You can see this really strong bullish trend that we got starting in June 21, and it lasted all the way up until December. So that's essentially a half of a year. We had a bullish trend on this asset. So someone told me yesterday on Twitter that I was wrong, that DXY weakness should have been what was looked at. And, I was thinking to myself, well, yeah, it's possible. But then I got to thinking, this could be already priced in. We had no reason to see massive uber dollar strength from the last half of last year. No reason at all. So the fact that we did see that, that's the market looking forward. The market's already assuming that there is going to be rate hikes, that the rate hikes more than likely will happen, and more than probably at least 2 is like high percentage probabilities of happening, at least 2. So this move up could essentially already be the dollar pricing that in. Okay, so that's where I went wrong. The market is always forward looking. So when we hear news or data, that any kind of new data that comes out, and we assume that we can apply some kind of fundamental analysis to that, you can go ahead and put this in your mind that there is a 50% chance the market has already priced that info in. Like the market already knew that info was going to happen 6 months ago and priced all that in. So just follow the technicals and I'll show you where I went wrong. First and foremost, let's go to the S&P 500. This is your weekly time frame chart. Now, the last time I had a live stream, I said that this move down can more than likely get bought back up because that's what happens with the S&P 500. Even though rate hikes are coming onto the scene, that doesn't mean that the S&P 500 is going to get bearish, right? The S&P 500 will more than likely only get bearish is if the rate hikes happen too much and too quickly. Like if they try to do 50 BPS each quarter, then the S&P 500 might see a sell-off. This can and ultimately will probably change my Bitcoin analysis as well. Now, I am still looking for a bounce on Bitcoin, the bounce that we are seeing. And I am still looking at that to go up to about 55K. And then I'm looking for resistance in that area. If Bitcoin gets above 60K, then I'm looking bullish. But as far as how strongly I feel about that has been dropped back down to it just essentially kicked me in the tail and said, you're not a fundamentalist. You're not a fundamental analyst. You're a price action analyst. So analyze price. Okay. So that's what we're going to do. We're going to analyze price. We're not going to get caught up in the minutia of trying to predict what is going to happen 8 to 12 months ago. You guys didn't sign up for that when you subscribe to this channel. You subscribe to me because you want to know what's going to happen this week. So let's stay with that from now on. This way the arguments get kicked down to 0 and we can be on the right side of the market. So right now my bearish bias on the S&P 500 is gone. The reason for that is yesterday's close. You can see here we're above the 50 on the RSI on the daily time frame, and you are currently above your 21 exponential moving average. Can this be a trap, or can price trade up to this supply zone here and roll over? It's absolutely possible. But for right now, as long as we're closing dailies above the 21 exponential moving average, we have to look for bullish entries. We just have to. Otherwise, you're fighting against the trend. And in my experience, fighting against the trend is never what you want to do. The trend is your friend. As cliched as it is to say it, and as many times as you've heard it said, it is true, right? If you're trading against the trend, your trades are less likely to work out. So we're going to be watching this. We have room from yesterday's open to there. So that's about a $40 move on the S&P 500, right? On the SPY, that's about a $4 move. So $4 on, a couple hundred shares is a nice trade, right? So we'll be looking to the upside on the S&P 500 just to this first area of resistance. Once we get there, then we have to stop, wait, collaborate, and listen what the market says, right? Because it could roll over there. But we can and probably should be looking for at least the range to the upside. Now let's go over here to Bitcoin real quick, because everything that I want to happen on Bitcoin is happening, right? That was my target. For some reason, people are under the assumption that I was looking for this swing low to get taken out, right? That's not what I said. What I said was this move was the liquidity run. This one. Here's your swing lows. And you got all the way down to beyond 2 week lows. This one and this one. You didn't sweep this one. You just barely touched it, right? You can tell, all you got to do is hover your mouse over the candle. Look up here. It tells you your open, high, low, close. You can see the low of this candle is 39.6. If I go over here to this one is 39.650. So this candle is $50 higher is its low. So you did not get underneath this candle, but it was close enough. That was my target from last Saturday's upload. What was I expecting for this week? For price to continue lower, come down, tack this swing low, and then bounce. Those were my exact words. That's what is occurring. So I'm not looking for that low to be taken out. Will it? If it's a bear market, yes. If Bitcoin is in a bear market, then I will look for that low to be targeted eventually. But first, Bitcoin has to trade up and find resistance, then roll over before I start looking for bearish targets again. Right now, the trade is to the upside on Bitcoin. Here's your daily, right? You have broken out of this daily downtrend. You're still below all your moving averages. So technically, it's not ready for bullish trades. But as far as how the price action looks, yeah, you can look for trades. You can look for them all the way up to the bottom end of the range. This range here. This is your support zone, right? That's the zone you broke down from. That's this Quasimodo looking head and shoulders, whatever you want to call this thing. This, I don't even know. It's in a downtrend, right? It's just a bullish pop. It's not really head and shoulders. It's just a bullish pop. But the measured move on that was hit almost to the cent. So the downside on this secondary run was completed, in my opinion. So now we'll look for the market to run back up. It can stop here. So we don't look beyond this. We look here in Trade Talk. We're intra-week, intraday traders. So we look to scalp the intraday and intra-week ranges. Right now we are inside of a weekly range. We did not take this bullish entry. So there's nothing to do now. What we have to do is we have to wait for price to trade back down, potentially to 43,178, and then look for potential bull entries there. All right. So if we go into the intraday chart, you can see how you have a swing low right there. So that swing low will be my, basically, once that swing low gets hit, as long as we're not closing a 4-hour candle below 43,178.02, which is 2-week support. This Sunday will be the 2-week close. This Sunday. So this is my actual favorite time because I love the 2-week closes. The 2-week time frame is my favorite. It gives me a medium macro view, and it's still a small enough time frame to where I can look for those bullish or bearish traps on the weekly, right? So this is the 2-week close. If we close above support, then this move is still not as bad as expected. If you close below this line, this is 2-week support at your lowest close. If you close below that, then you've done something different. If you close upside of it, but above it, then you can look for bullish entries up to the next range, which would be 46,166. And that's as far as you go. That's as far as you go because we can't see beyond any support or beyond any resistance level. Good morning, everybody. I don't know how you guys... So it's 11 a.m. here and I'm watching from my bed. I don't understand what you're talking about. If it's 11 a.m., you shouldn't be in your bed. Dollar strength is very difficult to predict from the macro since it's a world reserve asset. The demand increase and or decrease can override any effects of printing. I agree with you, Q Dizzle. I agree with you 100%, my friend. It's not easy to analyze price and to get a bias anyways. Even for a daily range, it's difficult. It's when you be able to do that consistently, then you're going to have a successful trading career. As often as I am right, I am still wrong sometimes. But what keeps me consistent is I don't do what I did yesterday. Right? I did it yesterday, but it'll probably be another 5 years before that ever happens again because it didn't work. And I'm glad it didn't work because if it would have worked, I would have continued to try it every time. Right? So if you heed the losing trades more than you heed the winning trades, you can fix whatever problems you have, right? Over the long term. So pay attention to your losing trades and figure out what happened, what you did wrong, what you could have done better. But, I mean, as far as Bitcoin goes, it's still bearish, right? The reason I'm saying that, guys, is because of this, right? You are in a downtrend. The weekly RSI is below the 50. People keep saying, why don't you look left over here? Why wasn't it a bear market then? It was. It was a bear market then. If you're below the 50, the bears are in control of the asset on the weekly time frame. The weekly, that's a big, big, big zone. That's also a buying area. You don't buy highs, you buy lows, right? If you're looking to buy low and sell high. So the B Word podcast is what saved this from continuing lower. The B Word podcast, right? Now, the reason why I'm looking at it as a bear trap, or essentially just a trap, right, on a whatever time frame, like a 3-week or a monthly chart, this was a trap because you closed above resistance and then you rejected and you've taken out that swing low. That's why I'm looking at this as a bear, like the bears are in control of this asset. There's your trap. Bitcoin has never done that in its entire history, where it puts in a bullish break monthly candle and then doesn't get follow through. You did not get follow through on this. Not only did you not get follow through on it, you completely retraced the entirety of the candle's range and took out the low. Now you can see that you are having difficulty closing below that. But there's 18 days left on this month. That's your 2-week there. So your monthly support, if we take off all these drawings, put this one back on there, you can see that you're testing monthly support right now. Monthly support. A daily close above monthly support isn't really nothing of concern, right? You could trade for a week above monthly support and then fall back lower. But this is going to be a very important place for Bitcoin. What you want to see if you're bullish on Bitcoin is you want to see it price migrate away from this level. The quicker it does, the better it'll be for you if you're bullish. Now, you do have other areas that you're going to come into contention with, obviously, other resistance levels. But you definitely want to get above that monthly, because if you don't, then you have a full-on bull trap. I mean, you already technically do, because that low was taken out with price. Price is already traded lower than that. So this is your trap candle. And trap candles usually have continuation. And it has, right? 3 months of downside. It's time for a bullish monthly candle, right? But where's that going to be? Where's that going to be? I think 55K is a good spot to look for potential resistance. If you're not in the same camp, that's okay. It is okay, 100% okay. I just really don't even think we should even worry about that until we get up there. Because Bitcoin might not even get up there. Bitcoin might not even make it above $47,000. That might be the end, right? We don't know what's going to happen. We can't see the future. So we just have to make probable guesses that are probable. So we'll keep using the weekly and the 2-week chart to get basically a trending move. If you're looking for short side entries, as long as you're trading below this candle, you're fine. I have not exited my short position yet. Yes, this is a slight pullback, but it's nothing more. If we get above this level, then I close my short position and I start looking for potential bounces to as high as it wants to go. And that's how I'll position myself. It's as simple as that. Now, also back to this, though. So once you put in this stuff right here, and then you traded higher, took out the highs, you had massive divergence. Massive divergence. That means that your bullish run is less likely to continue. That's what divergence is. Divergence is when the momentum oscillator isn't as bullish as price. Right? You're not even close to that. Here's your swing high, right? And there. So, I mean, it's nothing. Even if you go from this swing high, this one, you're still at divergence, right? You're still bearish divergence. This whole top, no matter where you put it, this swing high is lower. So it's divergence. The divergence is probably played out because there's your 50 test. So what this could be, if you want to just guess or think into the future, is this could potentially be your last stab. This is the divergence playing out. This was your liquidity grab. And now price goes on into the land of milk and honey. Maybe that's what happens. Maybe my analysis is wrong. And I'm okay with that if it is, because I'm long spot Bitcoin. I am as bullish as one can get on Bitcoin. But if it wants to be in a bear market, why not take those entries? Why not accumulate more Bitcoin? So that's what I do. That's what we do over here. Nothing wrong with it. So we're not going to look for any new short positions until we get up in those areas. If it fails here and rolls over, then likely we're gonna miss it, because it's too down, right? You're oversold on the daily, so we need to wait for a bounce. There's a bounce though. I mean, that was a momentous bounce too. You're almost back at the 50 on 2 bullish candles. And the candles are not even that big in range. That's crazy. So yeah, we'll see what happens. Bitcoin is in a downtrend on the daily. I mean, you're oversold. You were oversold. That's a bearish trend. Simple as that. But Bitcoin has been oversold before and rebounded. Over here, it did the same thing. Oversold, rebounded. It's probably done it multiple times. Oversold, rebounded. That was March 2020. So yeah, it could rebound. Absolutely it can. I'm not saying this is the death or the end of Bitcoin. I'm long-term bullish. Let's go look at some FX pairs. Euro USD, big strong move out of there, which was to be expected. We were looking for this to potentially be like a bull, like a bear flag or whatever. There's your breakout. So there you go. You want to know which way it's going? It's going up. So now we're going to look for pullbacks. When we were trading down here, we were in this range. It was difficult. Very, very difficult. So this breakout can last for quite some time. So if we get any pullback opportunities on this, we're going to take longs. There's a good there's a good possibility that that's already happened. And I'm going to show you what I mean. So here, right? There's your original breakout. There is hourly support. Man, that's pretty, huh? Support, 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 support. Boom, see ya. Now, currently what we're seeing is a bearish engulfing on this. And the overall trend is still down, but the near-term trend is up. You're above your 21 on a daily closing basis. So I would look at any big bearish moves as potential buying opportunities, because people are going to want to still short this thing, because deep down inside, they really think the dollar's going to go up again. And I'm one of those people, but we have to stick with the trend. Order flow is bullish right now. So we're going to look for bullish entries unless we drop back down into that range, right? If we get back down into there, then we'll decide what to do later. But that's not happening yet. Am I going to look to take a bullish entry on this today? No, no way, because this bullish move was rapid. It was big, expanding. So you're probably going to get 2 days of chop before you get your next impulse. But watch support, right? Watch the swing low. Maybe price comes back down and swings below there and then rips back to the upside. But there's definitely a bearish engulfing on the hourly. The close is what's important, though. There's 5 minutes left. What did pound do? Pound has been strong. Pound has been strong, right? We discussed this. This thing is strong. This is not bearish. It's a freight train to the upside. It's been a one-sided market. If we were looking for bearish continuation, once we got above that, it's over with. We're not looking for bearish continuation anymore. You are changing trends. Market is changing trends. It looks like it's going to be a risk-on environment, at least for the first hike. At least for the first hike. So there's the big downtrend on the daily. You got above that, you're breaking out, and you're seeing bullish continuation. It's absolutely insane. Insane. Everything has changed right before our eyes. Pound yen, strong. Yen is weak. Look at this. Weakness in the yen. If we were going to continue with the risk off, we would see this going lower, not higher. I was risk off. I got short up here, wrote it down, traded sideways. I exited the position, and I'm glad I did, because now we're right back up where I took that short entry. So price completely reversed this entire bearish move. That's not bearish. That's not risk off. Risk off is when the yen is strong. We were looking for the yen to gain strength. It did not. All right? It did not. So we have to stop looking for yen strength until that starts to happen. The Swissy was strong, though. It absolutely was. Now we're starting to see a break. Starting to see a breakout on that. So we can look for bullish entries. The trend is still down on this, but as long as you're above the 21, you have my permission to look for bullish entries. You're well above the 50 on the RSI. So what looks like it wants another pullback, a slight pullback. Maybe it wants to take out yesterday's low. Who knows what's going on? Or are we potentially seeing a bullish entry now? Probably not. This thing, look at this. It looks completely different than euro dollar, doesn't it? That looks completely different than euro dollar. It did have a nice bullish breakout, but that's disgusting right there. That's a retest of a main level. That's your resistance. Boom. So you broke out and you've already retested it. So unless we get a daily close back below the 1.04430 level, we're going to be looking for bullish entries on this asset, guys. This might be one of the ones to look for, right? It might be a very good play because it is so extended to the downside. So there's our open of the day. We're already trading into it right now. So we'll watch this and watch support. Here's support right there. Now, like I said, it had a big move. This one, let me see here. So that's today's range. This is odd. So Swiss franc was super strong yesterday. Why? Market's confusing me. Why was the Swiss franc strong yesterday? When everything else was indicating risk on, we still have this nonsense. Alright, so what we're going to do is we're going to look at this as just like a fake out move, trying to get people off sides on the bearish side. Watch this level down here if you're interested in Euro Swissy. The reason is because it's a massive downtrend. So just a pop could be a nice play. There's too many bullish candles in there. Let's go look at the weekly and see what we got. There's nothing on the weekly. Everything's bearish. Look at this. 2, 3, 4, 5, 6, 7, 8, 9, 10. And 12 bullish, bearish weeks in a row. My goodness. Swissy strong. And that is a risk off currency. So even though the yen isn't strong, the Swissy is, there's still that notion like this dollar move could still be suspect. Nah, stop it, Heath. We're going to look for bullish entries. We're going to get proven wrong on the other side of the market. Or just wait, right? You can always wait. Being patient is definitely the thing to do in this market. So let's just remove all drawings and just put one on the chart. Boom. If we get below that, then we know our bullish bias is over. Okay, that's your weekly open. It might be a good spot to look for bullish entries even. I'll keep you posted. New member, welcome. No credits left. Welcome to the retail level, my friend. We do a live stream every Sunday at 11 a.m. Eastern Standard Time. All right, so there's pretty much nothing to do today, unfortunately, because when you have big, massive expansions and ranges like that, then you basically get chopped the next few days. We might be able to find an outside pair like that doesn't have anything to do with the dollar to trade. Oh, excuse me, but we'll see. Let's go through here. EuroCAD, for instance. What is this doing? It's disgusting. This chart looks terrible. Definitely not bullish. Well, the reason is because CAD has gotten oil strength. Oil strong. So CAD pairs usually CAD is usually strong when oil is rising. You can see this versus the euro or the dollar also. The dollar CAD. Dollar CAD put in one of the most beautiful looking head and shoulders I've ever seen, and you've gotten follow through from it. But I am not a pattern trader, so I didn't take it. But I mean, you can see it. I mean, shoulder, head, shoulder. You don't get much better than that as far as pattern traders are concerned. And then here's your neckline right there. So, I mean, boom, boom, boom. So, these moves do have measured moves. Basically, just take it from around the high down to your neckline, and then from that support zone. So, you do still have possible continuation on this. Let's see if we can find a weekly level, because then you can look for potential pullbacks. There's nothing on the weekly. If there's nothing on the weekly, there's definitely nothing on the 2-week. Then again, you're into 2-week demand. So looking for bearish entries down here wouldn't be advised. However, a pullback on this range, you could potentially look for bearish entries. I'm trying to see where I'd be looking. Yeah, you got one zone to look. So in the middle of this would be here, right? And you just outline that whole candle. Screw it. And just look out. Something like that. Maybe you find resistance here. Maybe you get a spike up and then retrace. But if you're trading above it, don't just try to short it. Don't expect or anticipate that move lower, please. Don't do that. Wait for price to confirm at least. By confirming it, doesn't mean it's going to work out. It just means it's confirming that your direction might be right. Right? You can yeah, let's use it. Let's use what we do, because that gives you exact price points, right? And exact price points are not objective. It's exactly the price. So what I mean by this is if you spike up and start to retrace, once you get back under this, then you could take a short position and throw your stop above that wick high. If you get stopped out, you're wrong. If you don't, you potentially caught it near the top, right? That's just entry criteria. If you randomly just try to sell these things, you're basically trying to step in front of a train. You cannot do that. I do it sometimes, but it's better not to. That's the most aggressive style of trading. And you don't need to be aggressive. You can use these levels and be uber consistent and profitable and less aggressive. Aggression, it's a thing. All right, so that's it on that. Let's see what you guys got to say. Thank you so much. No credits left for that, my friend. Qdizzle had a good comment. What the chances of the Fed reversing the hikes if the market reacts very negatively? I feel like we can't rule that out or predict it. Well, we're not predicting it. The CME is, right? The futures contracts are. That's what's predicting it. They are, not me. I'm not predicting that. They're predicting an 80% chance that there will be at least a 25 to 50 BPS hike in March. That's as far as they're looking. Once you get out into once you get past the 4 rate hikes, the odds start to drop dramatically. For 5 rate hikes, there's like a 6% chance. For 6 rate hikes, there's like a 2% chance. But for 1 rate hike, there's an 80% chance. For 2 rate hikes, it's like 65 to 67%. 3 rate hikes, you can see what I mean, right? Each hike, the odds get less and less to down to below 50 on 3. So, I mean, that it's not me predicting that. It's the market, the overall market. And it looks like it's already priced in. Already priced in. Good morning, boss, says Edom. Good morning to you as well. Is that red? Yes, I read that the street was looking for minimum 4 hikes. Yes, the market's pricing in 4 hikes. Or priced in a couple hikes at least, we could say. I think and then back to the box says, if that happens, probably markets will go berserk. I think the markets go berserk if we get, like I said earlier in the stream, like if the Fed tries to do 50 BPS hikes and they get to 3, then you're probably going to see that bearish reaction on the markets. As long as the Fed does what the market's expecting, there's no point in looking for bearish markets. There's no point in looking for risk-off sentiment, right? There's no point in it. No point at all. We'll just follow the trend, guys. Let's get ourselves right back on the right side of this market. It sucks being on the wrong side of it, and I was for that dollar move, and it happens. Can you explain what the disagreement with you and Brandon was about? It seemed we were both calling. All right, man. I'm not going to do it on a live stream. I'll talk to you about it in the Discord chat. It's just, me and Brandon have a past. We didn't get along that great when he first showed up in the CTM. But I'm not going to bash him on a live stream. I'm not going to bash him anyways. He apologized. I accepted it. We're moving on. That's it. You know what I'm saying? That's it. When trading, can you advise on taking leverage? And yes, 2x, 3x. No, I can't advise you do anything with your money. I am not a financial advisor. And if I do, I can seriously get in trouble. When I say I take entries and I'm doing this and I'm doing that and I'm looking for this and I'm looking for that, that's me showing you what I'm doing to kind of help you look for the same thing. But I can't physically tell you to take this trade, use this amount of money, use this amount of leverage, put your stop up here. That's all financial advice. I can't do that. All right? If I say I could take a trade right like here earlier, look for this to fall back down, then throw a stop above that, that's not me giving you financial advice. That's saying what I would potentially look for. There's a difference. And it's a huge, huge difference. What was that? Something was... So why did No Credits Left message get deleted by Juice? Let's see what it says. That's better. I don't know what's going on. Anyways, hope you're doing well, Ruby. Or Buddy, sorry. It was a good trade. You were around the few, bearish at the time. Yeah, the short is working out. It worked out. Smash the likes, people. Yep, if you wouldn't mind doing that, it'd be fantastic. No one can see into the future, but with time and experience, one might be able to use price action technical analysis to target possible money. Yes, cornered in one area's time and space. Absolutely. That's all I'm doing, right? That's all I'm doing. I'm taking what I see that happened in the past and potentially looking for that to continue, right? I am a trend trading. That's my strategy, right? I follow the trend. In ranges, my strategy also works good, but it works good once you have a range that basically just got started, because ranges are difficult to trade as people are continuously looking for the breakout, always looking for the breakout. But I tend to stay away from ranges. I just do. If there's not at least 30 or 40 pips on the range, then I don't want it. I don't even want to mess with it. If it's a really tight range, just let it. Wait for the breakout and then look for pullback entries. Swiss announced new digital currency payments. That's why. Gotcha. Thank you so much. On the replay, very clear perspective on BTC. Thank you. You are welcome, Danny B. Thank you so much for your continued support, my friend. Can you look at ZAR? Haha. Do you think... Oh, which one? USD ZAR? Or do you want Euro ZAR? Let's see. South African Rand. This thing looks exactly... Did you see that? I just switched from USDCAD to USD ZAR, and the price action is almost identical. Almost identical. So it just looks like this is going to trade with the dollar. So it wasn't range bound like the dollar was, right? The dollar was completely jacked up here. Printing piano keys. This was not. This was actually starting a trend. Right, you have a lower high there and the new lower low. So on this bullish pop, I would have probably been looking for shorts. This candle here would have probably stopped me out in all fairness. Right? Because I would have been looking for this area to hold as resistance on this trade. So I potentially would have entered here. Now, obviously, I would have taken profits once my target was hit. But this candle would have taken me out right before the real trend. That would have been the real trade there. But there's no way to know if that's ever going to happen. We have the data that we have that's being done right now. We can't predict the future. So this would have stopped me out of the trade. It would have been a successful trade, but I would have liked to had that 1/3 piece left on for this as well. But that would have got me for sure. For sure. So, yeah, your trend is continuing. You're looking for a downtrend. You got your first lower high. You got a new lower low. And the fact that you took out this swing low. So lower high, lower low, lower high, new lower low. Look for a lower high. I mean, don't look for the trend to reverse. Look for the lower high. And you could potentially see that here or here. So those are going to be your areas to look for potential short side entries. Or the areas that I would look for potential short side entries. There and there. Depending on how price trades. But this thing is crazy. You got 77 pips on the spread. So it's difficult to adjust your risk with stuff like that. I mean, the O&A of the tool will do it for you. It'll do 1% risk of your stuff, but I don't trade these pairs. I try to stay away from them. The Turkish lira and the USDCNH. The reason I was looking for those two was because where the USDCNH simply is because Chinese they've already talked about selling the yuan, and if they do that, then that's going to weaken the yuan, yuan or whatever yuan, right? But dollar weakness. So what I was looking for is scratched. There was your your bullish breakout. That's your bullish trap. So, yeah, wait for the reversal before we start to look to get long on this. It looks like it would be a fantastic bullish opportunity with that massive trend to the downside. I mean, that's massive. And the range is getting tighter down here also. So we can look for breakouts one way or the other. But while you're trading inside of this range, you're going to get chopped apart. Chopped apart, meat grinder. And then the other reason why I was looking at this USD Turkish lira was because that was the biggest move in FX's history. And all we were looking for was this. This happened. This has already happened. So we're done with this one as well. That was the high probable trade to the upside, right? Because that was a 38% drop. I was expecting the market to reprice that back out before rolling over. But you had dollar strength or dollar weakness yesterday, and you can see that displayed on this chart as well, right? So potentially look for a short side continuation. See if this thing, if you want to trade this, see for it to grab a hold of resistance and see if that resistance holds. You're into a potential area now, right? So what I do is I just go into the intraday chart and I watch this level. If I start getting closes above it, then I forget about the short. If it can't close, if it attempts to get above it a couple times and can't close, then I'll look for shorts. But that has to be within my time window as well. If it's after 9 o'clock, there's a good chance I'm not taking the trade. My trading window is generally from 7 to 9. 7 to 10, 7 to 9. Pretty much if it's 9 o'clock and I haven't taken a trade, I generally don't look for any new trades. How about crypto? Just stay sidelined? Well, I mean, if the S&P 500 is going up, then yeah, I mean, the overall crypto market's going to do what Bitcoin does, okay? I mean, so if Bitcoin is bullish, get bullish. If Bitcoin is not, then don't. And right now, Bitcoin just is, you can't say that it's bullish yet. You can say that it has broken out above its near-term downtrend, but that does not mean that it is bullish. Does not mean that at all, right? You've broken out of that. That's all you've done. So, but since you have broken out of that, you can potentially look for longs. So you can do that on other cryptos as well. If you have a technical basis to do so, make sure there is a technical basis to do it. Don't just do it because you think Bitcoin's going to go higher. Make sure you have an actual setup. What's Adam doing? Yeah, see, Adam has been looking great. Bullish, right? Stalling at res. But you did get a daily close above it. And now you're back above it. So, like, something like that. Yeah. See what happens. Like, this is a potential setup. Watch for an hourly close right here. $40.10. If you cannot close below which I wouldn't use that level. I would use the hourly, the last hourly resistance, which would have been this bullish candle here. Essentially because you broke out, right? This was your resistance. Then you had this pullback. Then you had this. This was your breakout. See? You closed above. That was your breakout. There's your continuation. So price is trading back to the breakout area right now to see if it wants to continue. That's a lot of bearishness. Don't mind this chart. I mean, if you look at this chart, it looks bearish, right? You set it in a high, then a lower low. Lower high, lower low, but it's an hourly. Intraday ranges can be choppier than hell. Here. That would have been your range, right? Smoked it to the downside, smoked it to the upside. So that can occur. But watch those two areas right there, $40.10 and $40.03. Those are the two areas. You get an hourly candle close below that, then your next area is potentially going to be $39.39. That would be your next support. So we'll see what happens with the atom. Because someone was looking at it the other day. This thing right here was doing okay, but it got crushed with Bitcoin. If I was going to be looking for bullish entries on an asset, on a crypto asset, it would have to be Luna. It would have to be Luna. Luna is the most bullish crypto asset out there. I don't know any other that's more bullish than this. This thing is bullish. Bullish. You're back above your 21 exponential moving average. You're back above the 50. Can that be a bull trap? Yes, it can. However, the trend is to the upside. The longer term trend is to the upside. This has not been selling off like Bitcoin. Bitcoin's off its highs 40%. How high was this off its highs? This too was off its highs 40%. Jesus. Oh, man. Never mind, I take all that back. This was just as weak as Bitcoin. It just doesn't look as bad. But it's definitely bad. So yeah, I mean, it technically has it. Let's see if it has. Yeah, I mean, technically it has broken out, but you need to close back above it. So it looks like you're testing it now or trying to do that. But this would be the one if I was going to look for bullish trades. It's just been so damn bullish. Every time people have tried to short this thing, they have gotten absolutely wrecked. Let me scroll down. Do you know of Tone Vays and his MRI indicator? No, I do not. I'm sorry. I don't know who that is or never heard of that indicator. Sorry, absolute accident. No credits left. Okay. Did you unhide him? Did you unhide him? Okay, never mind. He's back. All right. Let's see here. Thank you so much as always for your exceptional work. I was wondering if you could do CRV USDT. Yeah, let's go look at it. What is this music I'm listening to right now? It's like sounds like something you'd hear in a movie. It's seen a pretty big drop. And yes, it can bounce from there, 40% as well. It can bounce from there, but that was a rapid drop. But this was pretty rapid as well, and it bounced. I think it's all going to hedge on Bitcoin. I really do. Bitcoin is the market leader. ETH was the market leader, right? You can look at the ETH BTC chart and see that. ETH BTC. You can see that it was the market leader. If Bitcoin was stronger than ETH, this chart would be going down. This chart has been going up for a long time. We traded in a very long range here, but then ETH strength broke out. Now currently you're down, but so is all cryptos, right? But this has been stronger than ETH. So I guess one could say the market leader was ETH, but you know what I'm saying. Bitcoin is the king of all assets. Ethereum maybe in the future, but right now it's Bitcoin. And you can go just on price alone. Bitcoin's worth 60 grand, or was. This thing was worth, what, 4 grand? That's how you tell. Whatever's more expensive, that's the asset that's probably better. But whatever it does, that's what's going to happen to the other cryptos. Because the liquidity that's being traded around that's why the other ones look the same. Because the same liquidity providers that are in Bitcoin, they're in other crypto assets as well. So, yeah, we'll see what happens. But if Bitcoin starts to become bullish, then maybe your some cryptos will too. I haven't looked at Bitcoin dominance in a while because I think dominance, in my opinion, is a lagging indicator. I mean, it's because it's changing every day. It was trending down, which means that alts versus Bitcoin was the trade to take, right? That's the futures. Where is dominance? Maybe I put it on the KuCoin. I don't know what I did with it. Maybe I put it on this one. There it is. Yeah, I mean, it's trending lower. But it's just the market cap. So, I mean, it's in the bottom of a range. Your bounces are getting smaller, but it can always bounce out of there. It's just in a big range. It's at the bottom end of that range. So some alts, if this breaks down, then look for some alts to run. So maybe it's the time to look for that before the breakdown. And yesterday's tweet when I said if you wait for 80% corrections, that wasn't directed towards Miles, guys. That wasn't directed towards him. He just said something to me that was interesting, so I decided to put it in a tweet. We were having a little bit of a tisk back and forth. I don't get mad at people when they have a different opinion than me. When it starts to get aggravating is when it non-stop, right? You can hit me up 2 or 3 times about how I suck and all that stuff, but after 4 and 5, I start to get a little bit, you know what I mean? I start to get a little bit red under the collar. So maybe I shouldn't have said it, but I mean, it's true also. Because I simply asked them, you know, how far does Bitcoin have to go down before you would classify it as a bear market? Right? Simply because, like, right? I don't, all right, let's change the subject. Coca-Cola, please. Oh, I didn't look at his other one, did I? What was the other one? Shit, I lost the comment. All right, I don't know Coca-Cola's ticker, but I'll look at, I mean, what is it? Is it C? It used to be C. No. Coke. No. Coke. It's just Coke. Nice. I thought this thing had a different ticker. All right, so it's absolutely bullish. I mean, really bullish. This is one of those things that, like, in risk-off environments, this is a safe play, right? It's a safe play. And you can see the capital rotated into this and has been in it for a while. I definitely would not be looking to buy this. No way. This thing is expensive. I would need a pullback. I mean, this thing is massively expensive. You see this? This line had to be drawn a long time ago. I was looking at that as resistance. Look where it's at now. It's more than 10x from there. This is an old chart. I don't even use big thick green lines anymore. So this was a long time ago. And here we are now. So no, I wouldn't be looking to buy it. Absolutely not. This is capital rotating into it in the before a risk-off event is potentially what it looks like to me. Like they're just getting their capital over into a safer asset. Because everybody's always going to want Coke, right? Coke's not going anywhere. Coca-Cola. Coca-Cola is not going anywhere. It's always going to be here. Their next biggest Pepsi is there, and they're situated. They both have a monopoly on the industry almost. They're not going anywhere. unless some stupid business manager comes and screws it all up. But in a multi-billion-dollar industry like that, I don't see that happening. It's just too expensive, my friend. You had Rose. I'll look at Rose and then I'll move on because it's almost time for me to wrap it up. And there's a lot of comments under you. This looks like a buyout. This was a buyout. Leave it alone. There's nothing to do here. If you owned it down here, good for you. But this is a buyout. Or it's either a buyout or they had a reverse stock split. One of the two. One of the two. And you can see there is no volatility. It's just trading in a straight line up there, which smells like a buyout to me. Smells like a buyout. I could be wrong though. Besides open, high, low, close, you mentioned, what other WLD would you recommend for learning technical analysis? Also, can you check SPY? Other than open, high, low, and close, the only indicators that I look at is the RSI and moving averages. That's it. I think that with those two indicators, you pretty much have every indicator built into them because every indicator does the same thing essentially. Yeah, they might have a little bit of a different mathematical formula, but they all do the same thing. And that one thing is they chase price. They follow price. So whatever price does, your indicators are going to do. So what's the point in having too many if they're all going to tell you the same thing? If you want to learn how to analyze price, just stick around. Don't expect to learn it overnight because I got news for you. There's not a YouTube video alive that's going to teach you how to analyze price quickly. It takes time. It takes patience and effort on your end to learn this. Like cocaine, right? Exactly. I am having a fantastic day. Oh, you're not talking to me. Thanks for the live stream. You're welcome, my friend. And let's go look at SPY. I mean, SPY is going to look just exactly like the S&P 500. SPX only cut down by 10. We'll do this. So I bought 480 puts up there, and it was a fantastic trade. But as you can see, price is going back up. So, and let's see where we are situated. Because basically, if the 21 exponential moving average on a daily can, it's not going to keep you exactly with the trend. It'll keep you near the trend. If you like, use the 50. The 50 pretty much covers the trend on this. Right? Drop below it here. Yeah, you held it here. So look for bullishness. Just because you see this, will this continue lower? You can wait until you get up there, but you can look to trade it up to that. Or I will be. I probably won't even mess with it, to be honest with you. Right? Because even if you bought shares or calls, it's maybe sell puts if you want to. I don't know, below the swing low, 448, a couple weeks out. It's not going to be a lot of premium, but I just think that the market's like sussing stuff out right now. But if I was going to trade it, I'd be looking for from this zone to that zone there, these two areas. Let me see if I can do this. I don't know where that's going to pop up. But yeah, I would say look for a pullback down next to the 20 exponential moving average. It looks like that's occurring, right? But we don't want to buy a falling knife. We want to let support happen. We want to let support happen. We have support here intraday. So on market open, you don't want to see it break, right? The pre-market, or this is yesterday's low. So that level there, you want that to hold as support. Pre-markets, you haven't done anything really. So, I mean, it's looking a little bit more weak than it is bullish. So yeah, that's what I would do. That would be my range. I would be looking for price to push up to here, but I would not be doing that if we lose this support 470.36. If you get an hourly close below that, then you're probably coming down here somewhere, 467-ish, right? And just let that play out. And then you can look for support. Or you could throw a fib on this move up and look for a 50% retracement or a 618 retracement, right? Wait for that to happen before you look to get bullish. Don't buy it now. You're at the top of the range. You got to let it pull back. It's just got to pull back. All right. Let me get this back up over here. Bro, Coca-Cola is the same as written. Right. I know. I got it. Yeah, Coca's here to stay like McDonald's. Absolutely. Rose USDT. And that'll be the last one. ROS USDT. Gotcha. Let's get off the hourly. Oh, man. Big move. Breakout. Yep. You've broken out. There's nothing to do, guys. The trade was below the all-time high. So watch the old all-time high. See if that level holds its support. You want to buy it now at the potential high? It's just... I know people always do that. They find something that's moving a lot and they want me to analyze it or give them entry points and exit points. This trade has already happened. You've missed it. You have missed it. Would I buy it up here? I mean, if I did, it would be just for a small range. Like, just to the high. And I don't even know if I would. That's extended to the upside. And you're printing bearish divergence. But that's the hourly, but it's still, it's still the trend. So it's weakening. Definitely don't look to buy it up there. It's got to pull back into support. Once it establishes that support, then you can look for bullish entries. And that still does not mean your trade will be successful, ever. But it's the best way to go about it. All right, guys, thank you so much for being here. If you have any comments or questions, as always, drop them down in the comment section once YouTube gets done processing this video. Thank you all for being here. Thank you for your support. Make sure you guys trade safe. Make sure you trade smart. And as always, happy trading, everybody.